now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. Today we're joined again with my friend Peter Grandich. How you doing today?
How you doing, my Christian brother friend?
Man, it's God is good, man. God is good. He's worthy of all the praise.
Absolutely, all the time. We're the ones that aren't.
Yep. That's true. That's true. So what's been kind of your outlook on the markets lately?
Has potential legs to maybe make things better in an area of the world that's going back to biblical times has been a mess. But overall, uh, while the equity markets are concerned, the bond markets are much bigger concern, and it should be a bigger concern for most people. And then there's this little thing called gold. Somehow just keeps going up and up, and it's given a run to the Energizer Bunny. And with that, even silver now is starting to look better. And of course, copper is performing admirably in all of this. So for me, overall, the last missing ingredient, we're starting to see it finally come together, and that's the junior resource market starting to see a lift, not a takeoff, but lift up. And so I feel pretty good as you and I speak today, my friend.
All right, okay, so a few things. So one, gold. Gold has taken off. I mean, the physical has done just it's just been impeccable, like the performance. Miners are starting to get a lift. Junior resource miners are starting to get a lift and everything. I know the royalty and streaming companies have been performing well. I think Wheaton Precious Metals actually doubled in the last year or so. And so I mean that's very bullish news. We definitely talked about gold quite a bit. I do want to talk a little bit about article you recently put out before we get to the commodities and how we can hedge against this retirement crisis. But you put out an article, Retirement and Aging Crisis from Bad to Worse. And I just want to kind of talk to you a little bit about what were some of the things you're seeing there. I know we've talked about it before, but um, it seems like you said from bad to worse, and that says something within itself. So what are you seeing going from bad to worse?
So just about everything I talk about it, most people don't want to hear, starting with the fact that retirement's a man-made myth. There's nothing biblical about it. In fact, most people worked till they dropped until about the mid 1800s. And at that time, a German politician came up with a novel idea that he would offer people a so-called retirement money if they made it to a certain age, which almost no one made it to at that point in time. And it's now worked up to where most people around the world, particularly here in the United States, basically kill themselves for about 75% of their life or a little bit more on the hopes that they would have this nest egg for that last part of the life to live some sort of comfort, enjoyment that maybe they didn't beforehand. Unfortunately, at least two-thirds of Americans are never going to reach that, Daryl, because two-thirds of Americans are working paycheck to paycheck. They're never going to be able to save up enough excess to live off of. And those who think they did or thought they were heading in the right direction have discovered they don't have anywhere near the sum of money or the level to where they could live the life that those wonderful financial service commercials show you by simply just sitting down with somebody. Next thing you know, you're playing golf and the grandchildren are jumping all over the place and everything. But by and large, unfortunately, a lot of people are going to reach that. And now the difficulty on top of that, from bad to worse, is we now have an aging crisis on top of that. And people say, isn't that the same? And I go, no, here's the problem. It's going to be a battle of the ages because what's going to happen is the younger you are, the more tax burden you're going to have in order to keep trying to support a failing system, Social Security, Medicare, Medicaid, etc. And one of these days, the younger person is going to say, hey, wait a minute, this guy Grandich is now 88. He wants a heart transplant or whatever, hundreds of thousands of dollars of medical coverage and all. I can't even pay my bills. This young guy is going to say is let him die or whatever. And believe it or not, in certain countries, that's exactly what they're doing, including in Canada, encouraging people of age who aren't either destitute wealth-wise or and or health-wise. And so there's going to become a battle of the ages. And the problem with that is that politicians go where the money is. And as the boomers reach our peak here and become lesser, and whatever money we have left is shifted to the younger, that younger voice is going to have a more say on what's going to happen. And so not only will there be a retirement crisis, but there'll be a battle of the ages. Not tomorrow. I mean, it's not going to be something you're going to read about Monday morning. But if you plan on living past the next 5 or 10 years, and then the big question is going to be is, why should I, as a younger person, continue to fund a system, Social Security, which you're telling me now in less than 10 years is going to be out of money? So I'm never going to see anything. So why should I keep giving you tax money that I have no chance of seeing? These are things that are, again, that are going to be built up and happen more and more as we age here. And it's going to become something that is going to be beyond a political hot potato.
Hmm. I'm glad that these issues are being there's more spotlight on them now. I mean, especially ever since we had Doge come in and I mean the promises that were made there, like the fiscal deficits, debt, and things of that nature. And so one thing that I'm seeing is, I mean, I've looked into Doge quite a few times, and the savings are, potentially 170 billion or whatnot. That's peanuts to an elephant, right? And so um, what can the Trump administration do about this? Because the big beautiful bill, right? It's trying to add more to the deficit and print another 3.3 trillion or whatnot. And so I'm just kind of wondering what is the current administration like? What can they even do about this? Like,
Well, I don't think much. And first of all, when they call it a bill, I call it more of handing you a bill because as a younger man, much of this burden is going to be placed the younger you are because this continuing deficit spending, which this bill does bring to us and add to our debt. Even the Secretary Treasurer was out today, and I spoke about it on my X page, saying how we can earn our way out of this debt problem, that we can have such a strong economy that so much excess cash should be made that we can pay down the debt. Listen, forget the 36 trillion there. That's I won't be around to say I told you so, but that's not going to be paid, period. The trouble now is, and that's where the bond market comes into play here, and is going to come more of a vocal thing to watch over the coming months than even the stock market, is people becoming legitimately concerned, are we going to be able to keep making the interest payments? Because of the size of the interest payments. We have $9 trillion coming due in the treasury market to be refinanced because one of our brilliant former secretary treasurers, who was used to also ran the Fed, when they had a chance to refinance a few years ago, instead of doing 30-year debt, she did short-term debt because it was a little lower interest rate. And now that debt has to be refinanced at a much higher level. And that doesn't count all the corporate debt that has to be refinanced as well. And of course, consumers are under pressure with debt as well. So there's no easy solution. And in fact, the solution is probably past the fail-safe point. Maybe back in the 2008 crisis, if we stood there and allowed ourselves to go through a very tough, uh, almost depression-like state and work off and bring our spending down to where we spend less than we make, we might have had a chance to fix it. But if you think about it, when Obama first entered, the debt was only 8 trillion and we thought that was a lot. Think how much it's gone up in 10 years. And so servicing the debt is going to become the prime issue. And here's another point, and why this trade war plays a role in it. Do you really think, and this is, I'm not asking you, I'm asking your viewers this and whoever may watch this. Do you think when it's all said and done, people outside the United States are going to want to work with us more, less, or about the same? I don't see how they're going to want to work with us more. That's why I continue to see a decline in their ownership of U.S. assets. I'm watching China and Japan get together with South Korea to talk about a new trade alliance. People have to understand two mortal enemies for hundreds of years are the Japanese and Chinese. Then the Europeans got together with the Chinese and listen, let's drop these tariffs and all. So I think the United States and Trump is actually making, by being a bully in this, I think he's going to make things worse, not better. And I don't suffer from the Trump syndrome. I'm also not a MAGNA person. But so all of this, and the long question of it is, when you got two-thirds of Americans working paycheck to paycheck, Daryl, they're going to be older. I can just tell you, somebody that just turned 69, I can finally say to you, Daryl, I feel my age. I didn't feel that 5 years ago at 64, but I feel it now and I see it and I understand it and all of that. And how are people that age and older going to be able to work 40, 50-hour weeks? And people say to me, they're not doing it. And I say, okay, really? Go out to any retail store, whether it's food, clothing, products, and there's really two groups that are working there, Home Depot, whatever. It's people very older or immigrants and all who really have to start somewhere and do something. And it gets much difficult. And what are those human beings going to do, Darryl? They're going to do what I would do if I was in their shoes. I'm going to look for the government to help me. And a government that's getting broker and more indebted by the minute. So it's hard to paint a legitimate, honest picture for the future. And yet my industry makes the retirement, if you watch any of the commercials or their pitches and all, it's very easy. Just come with us and everything will be taken care of. Nothing could be further from in my eyes.
Yeah. That that is true. Yeah, and I've seen that. I've seen that going to, I mean, fast food restaurants. I've seen older people working there and other retail stores and such. And so, and I think about that. I think about, you know, this person may, without making assumptions, most likely had to re-enter the workforce
Well,
or
they're in their 70s or 80s, Darryl, which many of them are now. Some may be there, they might have lost a spouse, they're doing something, but by and large, they're there because they have to be there. They don't want to be there. And that's just going to grow more and more. And it's going to come down to the level of ages. It's not going to be just up at that point in time. One of the other, the single big, here's two biggest change in retirement planning that I could tell you for somebody who's been doing it for 40 years. 10, 20 years ago, when people came in that were retired or were close to retiring, they almost never had mortgage debt. Their house had at least been paid off over time and all. That's changed dramatically. And the biggest, and you see it in all the polls among seniors, people are more fearful now of running out of money than passing away. And
yeah.
the thought of being without money and, destituted and so forth and so on, and anybody that's looked at what little's available through Medicaid or Medicaid housing, it's not a place that most people want to be at or be dependable on. And it's a big, big concern. And then on top of all of that, and I see that where I live because I'm in a senior community, children having to come back to live with the parents for one reason or another, sometimes divorce, sometimes financial, what have you, and all. So, this whole, to answer your question and why I said from bad to worse, I can just tell you for somebody that's been doing it for 40 years, this is the worst I've ever seen it. And it's a lot worse than it was 20 or 30 years ago for most people.
hmm So, and not to compound on the issue or beat the dead horse per se, but just want to get your take on, like, I've been thinking a lot about AI and job losses. I mean, when you got robots flipping burgers and like, I'm just kind of wondering, like, what's your take there? How does that fit within this?
You hit on that's another all part of it. You're seeing some of the statistics now of how much robotic NIA will be replacing in the workforce. At a time, it's true, population is decreasing in a lot of areas, but while it is, the immigration is increased dramatically around the world into the Western world. And most of those people, good people and all, are not coming over and starting as rocket scientists. They're coming over and started the low end of employment. And that's where robotics uh, plays a huge role. They just showed all the Amazon now. of the robotics now that used to be 100 people that they would hire to process within one of their warehouses, 97 are no longer needed anymore. It's robotics. You look in China, China was producing 100% robotics in their manufacturing of their cars. Eventually, that'll come here too, and all. So that you bring up an excellent point again that people don't want to talk about. Throw that on top of what we just discussed before, and 10 to 20 years from now is going to be a very big challenge in a lot of different ways.
Yeah. That's definitely grim to think through. What role can gold play in for those who are thinking about retirement or just thinking about being, um, in a decent place financially later on in life? And so, what role does gold play in this?
Before we talk about gold, let me just put you a couple that mandatory things through my planning group the first time I sit with somebody. First question I ask, which half fail, almost two-thirds fail. Are you spending less than you're making? And by the time we look at everything, that's not the case. So the first thing is you have to start spending less than you make, and that's critical. Two, are you getting what you need or what you want? And they're two different things. You know, a great comedian long since passed, was not religious at all, but he has the greatest single skit, and I use it in my work to show people, was George Carlin about too much stuff. We have too much stuff now. That's the other issue. Your parents, our grandparents, doesn't matter. The color of our skin, the nationality, where we lived. We lived in smaller dwellings. We didn't have as much stuff. Our parents didn't even have credit cards. But
Yeah, one TV, right?
on TV, the whole nine yards, pass down clothing, all that kind of stuff. We didn't have $400 sneakers. I had skips. That's what we called kids when I was a kid if you didn't have Converse. But the whole bottom line is that that's the second thing we got to work on. Do we need all this stuff? And it's hard for people to let go of it because Wall Street and Madison Avenue, the advertising as well as the financial industries, have put up this facade that more money equals more happiness. And they would want you to believe, and it's all behind their marketing, that the guy that drives the bus can never be as happy as the guy that owns the bus company. When in fact, studies after studies show some of the more happier people are people with far less things. So the two things I work on right away, which knocks out a lot of people because they don't want to hear it, is you got to first spend less than you make, and you got to get through that you don't need all your stuff. Put your life in order, understand where money's going on. Now, if you got past that and you have excess and you say, okay, some of these things guys like Grandich and Darrell are speaking about, sounds like things could get pretty bad and all. Yeah, that's where gold always comes into play. First and foremost, before you think about making money on it, it is an insurance policy you hope you never have to collect. Listen, most people right now watching this have home insurance and car insurance. And 99% are hoping nothing happens to their car and nothing happens to their home. But if it does, they want something that offsets it and allows them to continue and all. That's what gold has been. Gold has always been the asset you want to own and hope you never have to use it, because if you did, then a lot of other things went wrong. But now it's gone past just an insurance policy. It's becoming potentially, I think, especially here in the US, eventual replacement when everything else blows up, when too much debt finally implodes and the world has an issue. One of the things that I think is going to happen, there's other people speaking about this. I'm not alone, but it's not a big discussion, but you'll be talking about it because you like this end of the industry. And that is, I think the United States is going to come out with a gold-backed treasury bond. That's how they're going to be able to keep interest rates lower than they normally would be and help continue financing. That's why I think Trump brought up in those early days everything about gold. Is it at Fort Knox? All the gold that's been transferred into this country, et cetera, et cetera. And look what's happening around the world. The reason gold has gone from 12, 1300 to 3300, heading looks like the 4 or 5000, is much of the world where people that have the money, central banks, have been buying it because they recognize it's going to be part of the only way they'll be able to hopefully solve or lessen the burden of this worldwide debt binge that the whole world, not just the United States, has been on. Then, on top of that, the risk leverage way of that is through the people that look for it, try to find it, and make money selling it. And that's mining shares and going down the food chain to little companies that hope to first discover something that could turn into a mine and so forth and so on. So, with all of that, it's been very rewarding. In fact, shocking for most retail investors that aren't talking and thinking about gold as we do daily. They're shocked when you show them statistics that since January 1st, 2000, gold and silver, but especially gold, has outperformed both stocks and bonds for 25 years. And well over half of financial advisors have only been in the business since the year 2000, and yet they badly missed owning the best performing asset because so few people have it in their portfolios. So it is a word that possibly people that are watching me and you are used to hearing, but I think it's a word that still has a lot of upside because most of the world is not yet invested in it. And it's like anything else, it'll be with a day you go for a haircut or you're driving in an Uber and the guy starts talking to you about gold and a mining stock, then we know we're probably closer to the end of where it's going, but we're not anywhere near that yet.
Hmm. Yeah, yeah, that's good to know. So silver is obviously still far off its highs. It's probably one of the cheapest assets out there. Um, so what's your view there? So there's been, I mean, there's been some movement. I mean, it's been above $30 for a little while, and typically it moves after gold moves, and gold has moved a lot recently. And so, I mean, I know some folks who are just all in silver, and for me, like I haven't been able to bring myself to do that. I have silver, but I'm more favorable of gold, even though the risk reward for silver um, looks it could be significant, you know. So, what's your take there on silver?
So, Daryl, up until a few weeks ago, for the majority of my life, and especially the 25 years I spent on the speaking circuit, I would always get the silver bugs mad at me when I would finish or somewheres in the part of my discussion when I said, even if I was bullish on gold, to me, silver's like kissing your sister. It was never that appealing to me compared to gold. Now, when I was bullish on gold, I knew gold, silver would rise with it, but I always felt I wanted to own gold before I owned silver. That changed recently for me for two big reasons. And now I put them in the same, they're sitting on the same side of the ballpark. One is what you talked about, the ratio, the difference between the gold price and the silver price. It recently went over 100 to 1. And historically, the number is much, much lower normally. That was one thing that turned me on. Then the other thing is the fundamental argument for it is much better now than it was 20 years ago. There was back in the mining in the 80s and 90s, when I was even a fund manager and all, and visiting uh, mining, production mines, different parts of the world. The miner used to think, silver, it's just a byproduct. We don't, it's there, we throw it in, it gives us a break. It's not very special to us and all. That's changed because of A, the usage, and the logic is what you hit on. If and when retail comes to this sector, just as they went into technology stocks, cryptocurrencies, and someday retail investors start coming into gold and the metals themselves, they like to buy the lower price things. They don't, any retail person has in their head they rather have 10,000 shares of a dollar stock than 1,000 shares of a $10 stock because they vision that dollar stock still going to 10, but they have so many more shares of it. The same as when they look at gold and silver. But the other thing that silver has going for it is this: copper. As you and I speak, copper's approaching 5 yet again. And again, a lot of times when copper would get weak, so would silver, because they were kind of tied in some ways together and all. So the missing link to the big three, gold, copper, and silver, has been silver. And you brought up a very good point. There's been a level, I call it more 34, 35. Some people reach down to as little as 33, but somewhere's in there, where mysteriously, whenever it gets near there, large, big sellers come out of the woodwork to sell. Now, there's been a camp that I've heard of for 30 years. You probably still interview a couple of those guys that are still around that have talked about the manipulation. And anybody, in fact, I put a tinfoil hat in a picture when I turned bullish on silver about a month or two ago. We got the same thing when we talked about gold. We were told that there's no such thing, manipulation doesn't happen, blah, 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 blah. And then, of course, years later, we found out how many people were doing it, people thrown in jail, fined heavily, admitting to it. And so my answer is, if they did it to gold, how could you say they couldn't possibly be doing it to silver? Yeah, I believe there is that manipulation. I think it's all part of stuff. And the reason it is, it's not that they hate it and all, it's just that it's paid off to do it every time. And they're going to do it until it doesn't pay off anymore. And so if and when we break through that level, look for silver to really vault and actually probably lead gold in percentage. But the real money is going to be made in the shares, because shares are still being valued as if gold was $1,500 and silver was 15 or $20. And when that tsunami comes and changes, the shares will actually make more percentage than the actual physical metals themselves. At least that's what Pete Grandich and his portfolio was hoping for.
Hmm. Yeah, it's yes, it's crazy to think that these markets can't be manipulated. And I was thinking about the Hunt brothers, back in the 70s and 80s. Um, when they were doing, I guess allegedly some form of manipulation of the silver price. But and so I think that can happen in reverse, right? So definitely, and we've seen the cases of spoofing and things of that nature. So, um, so I do want to talk about another asset, in addition to this, especially thinking about portfolio construction and what could help you accumulate more wealth for potentially retiring later. Uranium. So uranium, there's currently a some legislation on the table, or some executive orders or something of that nature about a new nuclear renaissance. And this news came out. I
Yesterday.
heard about it a little bit before then, but then yesterday it blew up, and I saw these stocks just go bananas. And so I just want to get your take on uranium and your outlook there.
So I have to tell you, and I hope you don't mind me digressing to this level, but it's
Yep.
ironic to me for someone that spent 25 years in natural resources, both as a money manager and then as a consultant, left for a while and came back. And until 2018, 2019, I almost never had any exposure or interest in uranium. Never.
Hmm.
In all that time. It was always something off there, or just, and one day, I think 2018, 19, I heard Lobo Tiger talking about uranium. And the last I remember was well over $100 when I was in the business. And he's saying it's 20 something dollars. I'm going, what? I started looking at it, and the story was just changing there. The electrification outlook by some was changing and all. And it ended up being the best timing that I ever did in anything metals. Got in things like Cameco at 8, little oil stocks, uranium either side of 20. And then by early 2024, uranium ran over 100. All these stocks went up 100 to 500%. And after having my head handed to me sometimes in the junior market over the years, I said, hey, everybody's showing these rocket ships every 5 minutes on their X page about uranium. Let me go out. And I went out, and I was going to stay out till a couple months ago. And I started to see people who just 6 months ago were banging their chests bullish, literally throwing in the towel. And I said, oh. Now, uranium didn't go all the way back down again. It only got to the 65, 66, that type of pricing. But for me, and the reason I went all this way to tell you is in all businesses, there's bellwethers. Years ago, when I started the business, it was IBM, GM. Now it's some tech stock. Well, in uranium, for me, it was Cameco. First of all, there's only a handful of public companies that you could buy that produce it, mine it, and produce it. It's not like mining where there's hundreds of them at all. But it was the bellwether. And I always would listen, even when I got out of it, I would listen to their quarterly reports, read everything about it. And I said to myself, this uranium story's about as good as it's going to be. And now with Trump and this movement of energy, and everybody around the world is realizing that you're not going to make it with solar. Wind, forget about it. I says, oh man. And so I looked at him and I said, okay, if they come back to a level technically, it's okay to own them. And most of them did. And since that time, in that short time, in less than 2 months, they're up 25, 50% or more. And like you said, after yesterday's news, uh, they vaulted up. I think the long awaited, this is what I would say to this, because there are people that just focus on uranium, just uranium. That long belief that you've held that, wow, this thing should really go to the moon and all. Well, I don't know if it's going to the moon, but I think it's going to reach the upper atmosphere. All the ducks have lined up here now, and people are realizing, and Tavi Costa put out a wonderful write-up about people have no idea how bad our electrical grid is, not just here in the US, but around the world, how much it's going to take in order to meet the demand of the electrification and AI and all of that, and that we don't have anywhere close to the metal out there. So 20 years ago, or even 10 years ago, a senator or a congressman would have told you there's no going to be no nuclear plant in our backyard. Now they're going, please, can you build one and build one really fast, especially over these next couple of years as we start to see. I don't know up where you were in the Northwest, but we saw states like California, even Texas, and all having to go through a lot of brownouts. And here's another key point. On June 1st, our electrical bills in New Jersey are going up over 20%. And the cost of electricity is just going to go through the roof. And we haven't even begun to think about with all these AI plants and, Bitcoin mining, whatever it's going to add to all this demand. And I like to joke, but I don't think it's much of a joke, Darrell. I like to tell people that our electrification system is so old, Thomas Edison installed some of it. So, to answer your question, I think a near perfect storm has come for uranium, and I think uranium will get above 100 again. And I think the shares now can, move up. And those who bought, I've advised them just hold on to them because I think they can go a lot higher, but raise your stops. So don't give up 50 or 100% profit and have it go back down to where you didn't make anything. It's one of the mistakes that people make in investing in general. They don't use stops. You should always protect you. You don't want to make triple digit on paper and then lose it all back. It's not a
Hmm.
good thing.
Yeah, I mean that Liberation Day was a blessing in disguise for for people that wanted to get in at a cheaper price, on many of these equities. Like yeah, many of them were just annihilated. And so yeah, and then now you're seeing them bounce back significantly. So yeah, it's definitely good stuff. So as we get ready to wrap up, I just want to get you mentioned the bond market earlier. There's a lot of talk about the bond vigilantes, the 10-year treasury. I mean, the dollar's weakening, and then the yields are rising, and then I've listened to a clip from Ray Dalio yesterday about how on one end, like we have this bill that's going to increase the deficits, but then you have the Fed in their position um, where they're going to really have some trouble with inflationary pressures and things of that nature, especially with where yields are going and yeah. So I mean, in the bond market is the backbone to a lot of markets, and so what's your take there on the bond market and I don't even know where we headed with that or anything. I'm just kind of doing some learning and some research. I just want to hear
Sure.
your
So
perspective.
at the end of 2021, uh, for our planning group clients, if they chose to listen, I said, sell all your bonds. This 1% rate thing can't last. And they were even talking about negative interest rates, if you remember back then. And you're going to lose money in bonds. And people said, you don't lose money in bonds, Grandich. You go into bonds not to lose money. That's why you leave stocks to go into. I said, you don't understand. Because rates are so low, if the Treasury just goes from under 2 to 4 or 5, you're going to have double-digit losses. And that's what happened. I have not suggested or for myself anything long term. I've stayed 1 year T-bills and 1 year CDs. And I saved because the losses that people would have now on those bonds, of course, if they held it to maturity, they're going, hopefully going to get paid and so forth and so on. The problem that we have, deficits going up, debt going up, the refinance we talk, but here's the big new problem on the block. Up until a couple of years ago, we lived off of foreigners buying our debt. They were the biggest owners of it. They're the big net sellers now. And the biggest, Japan, has got a huge problem now. For years, their interest rates were near zero. There was something called the yen carry trade. People might have heard it and not even know what it was about. But basically is you sell that bond and you put the money here and make the difference. Well, now their long bond is approaching 4%, not too far from ours. So they're not going to be running here to own our debt in the way they've done. And they had their own problem. And then they're going to be out in the world competing for that money to finance huge, huge debt versus GDP levels, worse than ours. And so the bond market, the one thing I would tell somebody is you better learn about it because it's going to have far more of an impact on our daily lives than even the stock market's going to. And as much as Trump likes to go when it was down, it was Biden's fault it was down. But as soon as it got up for the year, it was because of him. He can put all the spin he wants on the stock market, but there are the people with the big, big money recognize that. And that's why even today, when the news broke this morning, the 10-year went down to like 4.45 and went right back up, well over 4.5, because people realize it's no longer weak economy means lower rates. Weak economy means even more difficulty possibly to pay the interest. And so that is going to be the talk as we go. And if and when the 10-year treasury is above 5%, I'll tell you also gold has made substantial new highs as well in that. And I think we're going to see both of that before the end of the year.
Hmm. Yeah, yeah. Thank you for that explanation. So as we wrap up, what are some things, you have anything else you want to share with the audience?
Well, I am concerned about one thing, if you don't mind me digressing. It's not so much about financial markets. I am concerned now. Our Secretary Treasurer made an interesting comment a month and a half ago or so, or maybe it's a month. And I looked into it and he was absolutely right. The top 10% wealthiest people in America own 86% of all the assets. The next 40% of Americans own the remaining 14%, and half of Americans have no assets. 1 out of 4 Americans now, or of the bottom 50% of wage earners, 1 out of 2 are now using credit cards just for daily needs, gas, food, paying a bill. Eventually, that won't work because even if you just pay the minimum is going to be so high they can't even pay the minimum. And the trouble I have with all of that is more Americans are on lines than ever before just for food. A food bank that, in fact, I had an event with them last night that we've gotten behind, my wife and I here, has seen a tenfold increase in less than 8 years in the number of people showing up. So, what I would just say is that those of us who, for some reason, God has blessed extraordinary with more than just getting by with the minimum stuff, we can no longer say those people. Those people are us people, no matter what the color of the skin is, no matter where they came from and all. We're human beings created by a creator, and I believe we should do whatever we can to at least somebody has something to eat, something to wear, and hopefully a roof over their head. And I think that's something for what's ever left of my natural life. Uh, I'm trying to focus more and more on. And I know I can say that to you because I know you're a man of God. And it's a it's a nation now where relativism, agnostic, and even atheism is becoming more dominant. But don't lose sight that the reason this country was so great compared to others, had a lot of faults, but still was the best place to be for the first couple hundred years, is because it had moral principles, but also a foundation built on a believer. And without it, we see some of the things that could be happening. And that's probably the biggest concern that I have, far more than what gold's going to do or what the Dow's going to do, or even what the who's going to win the Stanley Cup or the Super Bowl or anything of that nature.
Yeah, yeah, for sure. Yeah, I appreciate that. That's living life with meaning and purpose, and the church is the biggest humanitarian in the world, and so we've seen the hospitals and all type of stuff just built out of the Christianity, and so that's a good perspective. And so thank you, Peter, for jumping on with us today. I'll be sure to link to your exit profile in the chat, and then also link to your website. You all be sure to go check that out. And thank you again, brother.
All the time, anytime for you, my friend.
All right, take care.